What's up, everybody? What is going on, everybody? This is BGFX Legend, your mentor, and I'm back again with another video. And in this video, I'm going to speak about the daily time frame, the D1 time frame. And I know that most of you guys, whether you're a beginner trader, advanced trader, semi-advanced trader, you have come across this time frame, and only just but a few traders actually use it to their advantage. And I'm here to tell you that this is one of the best time frames, and you should never ignore these time frames. And here is why. Right? So when we are trading, there's what is called the pressure of trading. Either you're scalper, day trader, intraday trader. Trading the daily chart eliminates the pressure of day trading. That is for day traders. We all get in the business with the fast results and get rich quick mentality, hence the frequent use of smaller time frame. I'm sure if you do a study or a research, you realize that 90% of retail traders are actually using the smaller time frames, and hardly will they actually use the daily time frames, or only just but a few, maybe 10% or less are using the daily time frame. In trading, many people think that the more trades you take, the more money you actually make. The opposite is actually true. The more you expose yourself to the markets, the more you are likely to lose, which is what the 90% of losing traders are actually experiencing. So the daily time frame or the daily chart actually gives you a little bit of peace of mind in terms of the pressure, like that pressure is removed off of your shoulder. And this is because of the reasons that I'm going to continue explaining in the few pages, right? So the first thing is that with the daily time frame, you are going to have what we call clean price action. And I'm sure that if you do a comparison of time frames, you realize that the higher time frame you go, the cleaner the price becomes, right? Understand that it takes at least 24 hours for one candle to form, 24 hours for that one daily candle to form, right? All the price action you see on the H4, H1, H2, H3, M15, M30, M5, M1 is all compressed into this one candle, right? So it tends to be much more cleaner compared to other smaller time frames. The daily time frame is cleaner and more reliable. You will realize that the time frame is much more easier to analyze. The higher time frame, the more accurate price action becomes. So when you now actually take your strategy, and you realize that a lot of strategies that people are using and are actually losing, if you take it to the daily time frame or to a higher time frame, you realize that that strategy actually becomes much more accurate. You increase or improve the accuracy of a strategy just by moving up, right, the time frames. Now the daily time frame. So the fact that one is to wait for the market to close or the daily time frame to close, this gives you ample time or enough time to do your research, analysis, or analyze them, and make informed decision in the markets. You analyze less, you eliminate analysis paralysis, which is the number one reason why people lose on lower time frames. Why? Because you are going to, with your strategy, you see 25 or 30 opportunities, and you would not know whether you can trust your mind, or it's your mind telling you that there is a trade or not, right? So obviously when you analyze less, the better the odds. So the daily time frame, if you look at it right on the right side of the chart where my mouse is right now, the daily time frame, just by looking at the daily candle, it is going to give you so much data. You realize, so this is an example of a bullish candle, a daily bullish candle that is closed. So you have the daily low, you have a daily open, you have the daily close, you have the daily high, which even if you are trading intraday or you're swing trading, you're going to use this data for your analysis. And some of these levels are actually the support and resistance, or your supply and demand levels, if you are to align them with your lower time frame price action based off of the previous day or the previous days, right? Same applies, or same goes with the weekly highs, weekly lows, weekly open, weekly close. This is something that I'm just gonna share with you guys. So just by looking at the daily time frame, whether you are a scalper or an intraday trader, you need to look at this time frame. You need to look at the candle and extrapolate and take the data and interpret what you're looking at, so that you can use it for your own analysis. Now, more time for decision making. when you're looking at the daily time frame or trading or analyzing on the higher time frame, the fact that one is to wait for the market to close or the daily time frame to close, it gives you time, like I said in the previous, to research, do your research. Either you're looking at your fundamentals, you're looking at your chart, you're gathering all the information you need before you can actually place that trade. So you don't have that pressure of, let me click the mouse now, the market is going to move away from me, because you wait for the daily candle to close, right? So this actually in a way is going to help you, especially if you are a beginner and you're starting off, or either you are working class or you have other things that you need to do. This time frame will actually help you. Now, less time on the screens. This is a disease for many traders. So instead of watching every candle movement, your time on the screen is less. You actually have time freedom by trading the daily time frame or looking at the daily time frame. Trading the daily time frame also allows you to manage other daily activities without affecting your trading and probability. This time frame is actually good for people who have side hustles or businesses or go to work, right? You can go to work for 8 hours, 9 hours, 12 hours, depending on your shift, and still come back to trade. You can actually be able to create more streams of income. Now, I understand that there's somebody who's saying, but you can make money on other time frames. I'm not saying do not trade the way you're trading. I'm not saying do not scalp. I'm not going against scalpers. I'm not going. Actually, I do scalp. I do day trade. I do swing as well. But I'm here to tell you that this might actually be what you are looking for. This might actually solve a lot of your problems if you have been blowing charts after charts, right? Now, if you don't want to trade the daily time frame, then you can go maybe to H8, H12, or you can do the H4. But you realize that the higher the time frames, you'll be much more relaxed, man. You place your trade, you spend more time on holiday with your family, you spend more time. That money you're making trading, you can actually spend enough time with your family without you clicking every button, everything that you're seeing on the markets. So it gives you a little bit of freedom, and also you have less time on the screens. Now, less temptation to trade more. This is also a pandemic when it comes to smaller time frames or scalpers or daily traders. Guys, when I say scalpers actually make money. I'm not saying they don't make money, but when you look at the odds, you realize that people who are trading the higher time frames, they actually have a little bit of consistency, right, in terms of their execution and win rate compared to the lower time frames. There's actually an edge that you get in the market just by trading higher time frames. So unlike smaller time frames where setups are frequently printing, the daily time frame takes time, and because of this, the temptation of trading more is reduced. You will not be tempted to make stupid decisions as compared to trading the 1 minute time frame or the 5 minute time frame. The less you trade, the more losses you actually avoid in the markets. So from today, do not become that astronaut. I want you to become that astronaut who's going to explore the daily or the higher time frame, the H4, the H8, and so forth, and get the data, and that will actually help you, and that will be cool to sort of get your feedback. If you're watching this video, before you go any further, I want you to like this video, I want you to subscribe, and I want you to click the notification bell so that when I upload another video, you will be notified. So let's continue. Now, let's take a look at this example of a chart of a simple chart that we see. We can see that we had sort of like a bearish pattern or continuation pattern in the form of a bearish flag, and the market was coming back to a supply level. You can actually see how accurate and clean the charts are, right? The market was coming back to a supply somewhere around here, right? And then we see also that we had a break and retest of a support level. You can actually see that the signals you get on the daily time frame, based off of your strategy, they tend to be more accurate. They tend to have weight. Why? Because this is where the big money is starting. This is where the big money is being pumped. People with billions, people with millions, they are not actually wasting their time looking at 1 minute candle, 1 minute time frame. What I'm trying to say is that smaller time frames are being driven by these bigger time frame. So whatever you see, even during the day, right? Let's say this is one candle. All the data you see is being compressed to this one candle. So you at least need to appreciate this time frame. You need to know what's going on. You need to use it to your advantage. Right now, look at this. You can see right here, from right around here where price was testing sort of like a support level, where we have like a bearish morning star pattern or engulfing pattern. You can see that we had 1, 2, 3 candles. We had 3 candles that we're buying, right? But when you look at a time frame like a 30 minutes, you can see the noise. There's so much that is going on. So you can see that you are best able to interpret price or the direction of where the market is going just by looking at the daily time frame. It's quite beautiful and it's quite spectacular, and it's amazing to be able to identify and see these things. Now, what are the other benefits that we get when we look at the daily time frames? Now, news releases and news spikes will not affect you that much compared to trading on lower time frames. Things like CPM, your NFP spikes will not affect you too much. Spread widening, let me repeat that. CPM and NFP spikes will not affect you that much. And also things like spread widening. There are brokers who actually widen their spreads during like news announcements, or when the market is about to open, or where there are certain activities happening in the market. They tend to widen their spreads to, to take people's stop loss or to absorb people's orders into the market. So when the market is, when spread is being widened, or when it's widening during news announcements, it has little to no effect to your trades. Why? Because your stop loss is placed in reference to the daily time frame. Trends on daily time frame tend to be much more stronger. Now, when you look at this is an example of a spike that I got from the 15-minute time frame. Things like this, people who are trading, putting their stop loss just below this support line where there's a dotted line, they are going to be absorbed just by this spike. But when your position or your stop loss is based off of the daily time frame that you're trading, you won't be part of this. This actually will not affect you. So these are some of the benefits. And also the other important thing is that when you see a trend on the daily time frame, either it's an uptrend or downtrend or ranging, these trends tend to be much more stronger compared to the smaller time frame. So if the market is buying on the daily time frame, it's really buying. And if you're trying to oppose it, it's up to you. But the trends tend to be stronger compared to the lower time frame trends. You see it's buying next minute, selling next minute, it's buying. Why? Because on the daily time frame, it takes time. It takes weeks and months for a trend to be established, and a lot of people, a lot of investors are actually looking at this time frame to place their own trades. Now, more pips, more money. The fact that you will be taking your trades on the daily time frame, you will have the ability to make hundreds, if not thousands, of pips per move. Please note that also that depending on your pay, a tiny piece of the profits will go to swap fee. Some pairs can actually pay you swap if you're trading in the right direction, on the direction of swap. Some will take money from you, but some can actually pay you for holding your trades for days or for weeks, right? So it's not really a lot of money when swap is charged compared to what you get and the number of pips. I know there's somebody who's saying right now, the daily time frame, if I place the daily time frame trade, I have a small account. How am I able to do that? So the technique is this: you need to trade the high time frames, but when you're entering, you are not using the daily to enter. You are going to you scale down to the lower time frame to have tighter stop losses, which is also what we trade at BGFX. If you want to understand, you can watch at the end of the video. I explain more about the academy. So we go to lower time frames to scale down so that we get tighter entries. We enter early, and then we are going to hold our trades for much longer, depending on how you want to actually trade. So what I'm trying to say is that excuse of saying I'm not going to trade the daily time frame because of bigger stop losses, we have actually annihilated it. We have eliminated it. Why? Because it is doable. You can do it. You just need to know how to reduce your stop loss and enter early and hold and ride the wave. Now, the daily time frame reference. So when you're trading the daily time frame, you need to be referencing the weekly time frame and the monthly time frame. So when trading the daily time frame, you need to understand that the weekly time frame and the monthly time frame becomes your time frames of reference. Big traders and big money and investors are actually looking at these time frames. So let's say you're trading the daily time frame. When you're analyzing your market, your top-down analysis is to start from the monthly time frame to the weekly time frame, and then you can start from there, and then you scale down to lower time frame for your entries. This is very, very important. So in our mentorship, we actually teach you a top-down analysis that is very simple based off of the concepts that we actually trade. So whether you're trading your strategy wherever you are, I'm really keen to know what you're going to do with the information that I've shared now, and how it's going to actually help you build your trading stamina, and obviously change, or obviously push you through into the stage where you see consistency and profitability in your trading. Now, trade duration. So when you're actually trading the daily time frame, looking at the chart on the left here, we can see that we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. We had like 16 days for this move to actually paying out. Now, your trades on the daily time frame are most likely going to last at least 1 day. So you can even if you're trading the daily time frame, guys, you can trade during the day. You can trade, like, the fact that you are able to scale down to lower time frames for smaller or tighter stop losses and tighter entries. Even if you're trading the daily, you can place your trade and close during the day. You are not forced to hold all the way through, but if you want to hold, you can ride these waves for at least a week, for 2 weeks, for 3 weeks, for a month, for a few days, depending on the move. Sometimes the moves are quicker, sometimes the moves are slower, but just imagine this is going to give you the freedom that you're looking at. It's going to give you the freedom that you're looking at, and also the fact that you understand what is happening on the daily. You can scalp, you can also intraday trade using the momentum that you're seeing on the daily time frame, simply because you can be able to analyze and see the market in the long term, that it is going to this level. So a lot of traders, they're just losing. Why? Because you just hop on your chart straight to your 5-minute time frame. You're trading, you don't know where the market is going, you don't know the barriers, what is going to block price, what is going to stop your price. You're just trading and the market reverses against you. You don't understand what's happening, simply because you lack this information, this very, very important aspect of your trading. The daily time frame, guys, is very important, and the 4-hour time frame as well. Now, who is this for? Who is this time frame for? This time frame is not meant for scalpers or people who need a lot of setups per day. If you're looking for a lot of action, this is not for you. And also, this is suitable for those who say they have busy schedules, or even those who are free, those who are employed, or those who want more free time and big returns as well. Number 3, if you are going to for prop firms, it's not the best time frame, unless if you are using lower time frame for sniper entries. Like I said, you can scale down to lower time frames, and then you sort of like get tighter entries. You can trade within the day, you close your trade, because I've realized that prop firms nowadays, we now have swing trading prop firms, but it tend to be much more interesting to be closing your trades maybe within 2 days, or the same day, or 24 hours or so. So you can still swing trade the daily time frame actually, but if you're looking for the ins and outs, then it's actually not for you. But this time frame is for those who are serious at trading, who say, I am serious, I'm tired of losing, I want to see action, I want to see proper results in my trading, I want to see myself actually standing in the promised land. This is the time frame for you. So who are we? We are BGFX Trading Academy, and we are here to create generational wealth through trading the financial markets. So at BGFX, we have an A to Z detailed Forex education that is beginner to advanced level. BGFX program is tailored to teach you strategies and concepts to become a professionally profitable trader. We also have a community of like-minded people. We have students across the world you can network with, learn with, and trade with. This will shape you to become a powerful trader. We also have what is called the Funded Traders Club, that is designed to help traders acquire funding from various prop firms using our strategies. We want our traders to become 6 to 7 or 8 figure traders. We also have a road to multiple figures designed for beginners, intermediate to advanced traders looking for an accelerated way to profitable trading in the Forex markets. Forex Advanced Trading series that consists of at least 100 videos with more than 1,000 watching hours, with a full roadmap to consistency and trading professionally. You can watch them anywhere at any time in the comfort of your home. Our BGFX team and community are available 24 hours a day, 7 days a week to assist you online. We thrive for excellence and want to give you the best service.